Greetings and welcome to the ROI Clear podcast. My name is Ray Hightower, and today we are fortunate to have as our guest Mr. Keshav Kolur. Keshav Kolur is the founder and principal of Clive Capital, and we are going to drill down into exactly what that means, what he is doing in the business world. Ladies and gentlemen, please join me in welcoming Mr. Keshav Kolur. Welcome, Keshav.
Thanks so much, Ray. It's an honor to be here, and I appreciate you taking the time to have me on. I'm excited to hopefully share some value with you and your audience.
Yes. Well, we're looking forward to that. We're looking forward to hearing more. So to kick things off, we'll start with an elevator pitch. Certainly being in New York and knowing all about private equity, you've done elevator pitches maybe once or twice, probably a lot more than that. But for those who are new to the ROI Clear podcast, Keshav is on an elevator with someone he wants to influence. So what would you say to that person in the course of an elevator ride?
Oh man, I actually don't do that many elevator pitches, but here it goes. Hey, my name's Keshav Kolur. I'm the founder and principal of Clive Capital. We help everyday investors, mainly tech employees, build generational wealth, achieve financial freedom through alternative investments. And our goal is to help, maybe 100, 500, 1,000 investors achieve freedom, financial freedom in their lives. I'm also a partner at a real estate development firm, Legacy Acquisitions, where we're focused on ground up development of built to rent single family home rentals.
Excellent. So you're a syndicator. You're helping people to achieve financial freedom, say that 10 times fast, to achieve financial freedom by investing in multifamily properties. And you are also doing ground up development.
Yeah, the term syndicator still confuses me to this day. But so if it's not built to rent development, primarily help with asset management and investor relations, raising capital, due diligence, that kind of thing. If it is real estate development, then I'm a part of the operating team where I actually have, a say in the business plan and am very involved in the day-to-day.
Excellent. And
Yeah.
prior to that, your background was in software development.
Yes, yeah. I'm still actually a software engineer, somehow have managed to keep my sanity. We'll see how long it stays. But I'm still a software engineer at Facebook, and I used to be a software engineer at Amazon. And so that's why I primarily focus on tech employees, helping them invest, because I know what they're going through. It's the same things that I'm going through.
Oh, yes. So yeah. So essentially you're what is it? At Microsoft, they used to call it eating your own dog food. So you're by helping yourself, you're also helping others.
Exactly.
Okay. Now, walk us through, if you will, the path from software engineering to real estate development. You're doing build to rent. You're also doing, I won't use the word syndication because you said that's one that doesn't necessarily fit you. So we'll explore that a bit. But maybe you can take us from starting in software engineering and then moving towards what you're doing in real estate and real estate development. How did you happen to travel that path?
Yeah, so I graduated college in 2019 and really started my first job at a car company as a software engineer working on autonomous vehicles. And I went on vacation probably for a month right after graduation and just realized like, hey, this is really fun. I traveled a bunch of Southeast Asia and real with my friends, and I realized, hey, this is really fun. And growing up, I saw my parents work a lot. The
Mm,
40-hour standard 40-hour work week, late nights sometimes, 1 hour commutes one way to work, but every day, even to this day. And I just thought to myself, that's not something I can do. They're doing it because they're first, I forget if it's first generation, but I was the first one raised here in the States.
hmm
My parents immigrated from India. So I'm like, they have to do that. That's the burden, but I'm grateful for what they've done. And I have to take it to the next level, for them, for my family, for my friends, for my future family. And so I knew that W-2 alone was never going to be enough for me. So on
hmm
the plane ride there and back to Southeast Asia, it was like 15 hours one way, a lot of time. I knocked out Rich Dad Poor Dad by Robert Kiyosaki. And so
Mm,
that's what really got me thinking about real estate, as I'm sure it got a lot of people thinking about real estate their very first time. So when I got back, I became a realtor, got licensed leap day of 2020, February 29th.
Mm-hmm.
And then, as we all remember, 2 weeks later, COVID shut the entire world down, basically.
Yes.
And once the markets opened back up, I sold a few homes, started looking at rental properties, and this was in Michigan, in Detroit.
Mm-hmm.
Luckily, before I went too far down that rabbit hole, my roommate here on the other side of the wall, his dad had been passively investing, I should say, into real estate syndications. And he came across a Reddit thread where someone was talking about it. And he was like, "Oh, hey, my dad does this. This sounds pretty cool. I know you're into real estate now. You should check it out."
Mm-hmm.
And so this guy on Reddit had owned 40 homes at his peak and just said that buying apartment buildings was easier. And I was like, I would much rather buy apartment buildings. It sounds so much cooler than buying one home at a time,
Mm-hmm.
especially if you can do it passively. So I started exploring that, talking to him, just reaching out and networking, because he hosted a meetup, meeting a bunch of people and analyzing investments, reading books, watching YouTube tutorials to vet the concept for myself because my parents didn't invest in the syndications. None of my family had at that point. None of my friends had either. And so I really had to make sure that this thing that people were saying was passive. It was superior risk-adjusted returns.
Mm-hmm.
It had tax benefits. And, I would say most would say at least it's a lower risk than the stock market, that this thing was really true. So
Mm-hmm.
it took the next year until September 2021. I felt comfortable with the idea, made my first investment into 108 apartments in San Antonio with the author of that Reddit post and started seeing the cash flow coming in because now I have 108 residents paying me and a
Yeah.
bunch of other investments too. It wasn't
This
just
was an
me.
LP investment too. You invested as an
It was an
LP.
LP investment.
Yes.
Yes,
Okay, got it.
exactly. So I was a portion. Not all 108 residents paid me. Maybe one of them paid me or something every month.
Yeah, yeah.
And saw the tax benefits come in too. So at that time, I thought to myself, okay, the U.S. government doesn't think this is a scam, so I should probably be fine, And I started seeing returns coming in. And I figured if I'm going to do this for myself, I might as well do it for my friends and family too. It's no fun just sitting on the beach, financially free, all alone. So I started my company, Clive Capital, in January of 2022. Like I mentioned, the goal is to help my investors, primarily tech employees, but really anyone who's down for the ride, down for the
Mm-hmm.
journey, to build a diversified investment portfolio to achieve generational wealth through these three things that I might have already mentioned: superior risk-adjusted returns,
Mm-hmm.
cash flow, that passive income that we always chase, and tax benefits, because that's one of the biggest obstacles that we face in building wealth. And then along the side, I knew that, real estate home development, single family home development, providing people a quality place to live was something that I was interested in. So I became a partner at a firm, Legacy Acquisitions, where we're focused on developing single family home rentals from the ground up. And so far there, we have 500 homes under development and hopefully more to come.
That is an amazing path. And then we should also add that during this path, while you were traveling this path, graduated from college in 2019, took a vacation to southern India on a 15-hour flight. You read the Purple Book, Rich
Asia,
Dad Poor. Pardon me?
Southern Asia,
Southern Asia. Where
Southeast
did I
Asia,
say?
India,
Southern Asia. Southern Asia. Right. You took a
like
trip to
Thailand. Yeah.
Southern Asia, 15-hour flight, read the Purple Book that so many of us read that pulls us in, right? Pulls us into the industry, and began looking at real estate, started looking at single family homes. Of course, your roommate's dad was involved in investing in real estate, so you had a resource there of people that could I would say guide you, but not necessarily. I don't think you necessarily were looking for guidance. You were looking more for information because you're making your own decisions, definitely. Found a Reddit thread of someone who was doing this well, invested with the author of that Reddit thread in 108 units in San Antonio, Texas. That was your first LP investment. Once you saw the cash flow and the tax benefits that were coming from that, you decided that, yes, this was something you were going to do. You were not going to focus on single family, rather you would focus on multifamily. And one could argue that now you're looking at, would you say that build to rent would be a hybrid between single family and multifamily? These are individual homes, but they're built for the purpose of renting.
Yeah, I would say it's a pretty good blend. Other people call it horizontal multifamily. It's really apartments, but they're just
Yes.
broken into their own living structures. So yeah, I would say now I'm really focused on being a built to rent developer with my partners and on Clive Capital. That's really a fund management company where I realize, hey, I don't want all of my money in built to rent. I don't want all of my investors' money in built to rent. There are other good operators in multifamily that we've invested with. We're looking at industrial. I've invested into oil and gas. So anything but index funds and crypto is valid for that portfolio.
Ah, all right. Anything but index funds and crypto. Why not index funds? Why not crypto?
Yeah, when I say index funds, I might even mean like the stock market more broadly. I would say the
Mm-hmm.
only, at this moment at least, the only strategy I see in the stock market that I'm interested in is these like hedge funds that are
Mm-hmm.
doing, I think like the one that I've always kept on top of mind is like the Medallion Fund that's been doing like 30, 40+% per year. But those are super exclusive. But otherwise, the index funds only get 8 to 10% a year,
Mm-hmm.
and they have their ups and downs, and they're all significantly correlated. Like if there's a war in, you know, there are two wars right now, Russia and Ukraine, and there's Israel and
Yes.
Gaza.
Mm-hmm.
Any slightest feel of a conflict breaking out, the stock market takes a hit, right? But
Mm.
even if it's completely uncorrelated, on the other hand, housing prices aren't going to go down just because someone else started a conflict an ocean away. So I like that real estate, and these alternative investments in general, there's less volatility.
Mm-hmm.
I would also say that there's tax benefits, right? In the stock market, you have your capital gains, long-term capital gains and short-term capital gains and qualified dividends, all of that. But that's just the tip of the iceberg. Real estate has great tax benefits, and energy, like specifically oil and gas, has great tax benefits. You know, I think even maybe startups do as well. That's an area I haven't explored all too much, but I'm
Mm-hmm.
interested in. But I just think for all the risk and volatility that it carries, it's not a level playing field either. There's no way that I'm beating out a hedge fund that has billions of dollars under management. They're going to make a quick $2 for every buck that I make.
Mm.
And there's definitely insider trading at, maybe the highest levels that we can't take advantage of. But in alternative investments, if you hear that maybe there's Six Flags coming up in an area and only you know that information or a few individuals, you can act on that information without being flagged for insider trading, as long as,
Mm.
the legal agreements don't forbade it or anything.
Right.
And yeah, I would say the last thing is kind of transparency. When you invest in an index fund or any big company like Nvidia or Facebook, for example, you don't know what their business plan is. You cannot tell me that you understand how Facebook makes its money or Nvidia makes its money down to every cent. But I can point to you that, hey, we made $1,000 in rent. We paid $800 of that to expenses, including taxes, insurance, marketing, payroll. And I can show you very clearly, very simply that here's how we're making our money. And you have a much greater transparency into your investment. Whereas you throw it into an index fund, you're just hoping and praying that the age-old statement of 8 to 10% a year holds.
Mm.
Those are some of the reasons I don't like the stock market and I like alternative investments better. And crypto is, I don't understand it enough. Maybe other people do. To me, I might as well just just go down to a casino and put all at blackjack. So
Yeah, yeah. Crypto, that's one of those topics where if somebody's really into it, they're really into it. And no
yeah.
doubt, you and I both know people who are really into investing in crypto. So that's interesting. What's more interesting to me is that in the investment world, everyone refers to real estate as an alternative investment. When you really think about it, real estate existed as an investment long before index funds or the stock market or shares in publicly traded companies existed, right? So really, we should regard the stock market as an alternative investment, but perhaps that's an argument for another day, right?
Yeah, hopefully not too soon though, because then I would have to change a lot of my marketing. So let's hold off on that.
You don't want to have to change all of your marketing pitches and all of that. Yeah. Okay. There we go.
Yeah.
And you know what's very interesting about you and your focus on investing is you're looking at build to rent. Like so many of the build to rent players that are out there are like the huge PE firms, the huge like the Black Rocks, the large, large PE firms, and you hear their investment in build to rent painted in a negative light, saying, oh, the reason the ordinary investor can't afford a single family home anymore is because BlackRock came in and just bought land to build 1,000 of them, and they're only making them available for rent. But it's good to know that a young entrepreneur like you, who just graduated from college in 2019, is able to start a firm and enter that space as well. So that's pretty
A
exciting.
partner.
A
I'm a partner
partner.
at the firm. I should clarify. Yeah, it's
Yeah.
my business partner and mentor. He started it. He has more of the experience. I'm the young blood who's learning and putting in as much time and energy as I can.
That's good. That's good. Yeah, yeah, yes. That's excellent. That's excellent. Well, tell us about mentorship and partnership there. How did you happen to choose this person as a mentor and a partner? How did that come together?
Yeah, when I started out networking back in 2020, I knew that there were two ways to really earn a living in this industry as a full-time investor, not just a passive investor, but a full-time investor. And that's really to either be the operator of the deal where you're actively managing the deal, or two, it's really to be a fund manager where you're more of like a mostly silent capital partner. You're contributing capital to different investments. I knew I had an interest in both, and the operator side of it is definitely a lot harder to break into.
Mm-hmm.
And that's definitely one where, if a bank's going to give you money to go out and acquire an asset, build an asset, they're going to need experience. They're going to need track record. I didn't have any of that. I was 22 at the time. And it wasn't my full-time job either. So no, not a chance anyone was going to take me seriously.
Mm-hmm.
And I also think mentorship just is necessary wherever you are in your journey. It helps you avoid mistakes. You learn from someone who's done it way longer than you have, and then you get to rely on their track record and in exchange provide some value, which for me at the firm is usually just putting together a lot of systems and processes about like what KPIs do we track, how do we do acquisitions, how do we track acquisitions, how do we do underwriting, how do we raise capital, things like that. So I think that's the mentorship piece of it, finding someone whose values you align with, someone it for the long term, not someone who's for a year higher. That
Mm.
Andy's going to be for decades. Similar value, and he wants to teach. He's a basketball coach too. So I
Mm.
think those are some of the traits that you have to look for in a mentor. And in exchange, you just have to be willing to do whatever it takes. I've been working together with him for the last 2.5 years now. And it hasn't been easy, especially in this financial environment, as you know, with interest rates and, political uncertainty. So that's mentorship. And partnerships, a lot of the same. Find people that you have similar values with, who are going to be doing this long term, who have an extensive track record, who are trustworthy, reputable people. Because at the end of the day, you're parking people's hard-earned money with them. And so it's other people's money. You should be looking at that way more with a sense of urgency and like due diligence, and also like a certain level of fear, right? You want to be
Mm.
responsibly fearful. Like this is someone's life earnings. This could be their retirement, their kids' college tuition. It's not to be taken lightly. So you really have to be doing your due diligence and make sure you know who you're partnering with or getting mentorship from. But those two things are key in any business, whether it's investments in real estate, you know, dry cleaners, whatever it is.
I love that. That is, you found in Andy someone who has more experience in that particular industry than you do, but your values are aligned. He likes to teach. He's a basketball coach. He likes to teach. He likes to transfer knowledge to other people. You have similar work ethics. I bet if I was speaking to him, he would say a lot about your work ethic. I think he would say a lot about your shared values, that you're both hardworking and there are certain things you want to achieve. And you both want to be in the business for decades, not 2 years and you're out.
Yeah.
Yeah, that's remarkable. You've taken some time to dig into that deeply. Will Andy also be with you on the fund? Because I know you have plans to open a customizable fund, an evergreen fund is what you're looking at doing. Is he going to be part of that as well, or do you have other partners with that, or how is that going to be structured?
That is my own venture. That's with Clive Capital. So
Okay.
that is just with my business partner there, John Lai. And again, that business, we invest into the build to rent deals that we do at Legacy,
Mm-hmm.
where Andy and I are partners. But with Clive Capital, that fund is meant to invest into not only build to rent, but again, for our passive investors, again, mostly people in the tech industry, but anyone who's along for the ride. It's apartment buildings in your portfolio, it's industrial warehouses in your portfolio, it's land, it's, oil and gas, drilling, all these different types of things, construction companies, concrete companies, all these things that will be paying you monthly or quarterly, whether you're working, whether you're taking vacation, whether you're in Asia or Europe or North America, wherever it is. That's really the goal with that customizable fund is rather than stock market picks, it's alternative investment picks.
Mm-hmm. Alternative investments, and we already talked about that. They call them alternative investments, but we're the original ones.
Yeah.
There we go. Now, right now you have over 40 million in assets under management, and you're planning to grow to over 178 million in assets under management over the next 5 years. And I'd imagine part of this is what you're doing with the Evergreen Fund, and part of it is with Build to Rent. Walk us through, please, how you plan to travel that path from 40 million to 178 million over 5 years. That's a big jump. So maybe you could map out for our listeners how you plan to travel that path.
Yeah, I will clarify by saying that I don't own all 40 million or all 178 million. That's just the value of the assets that we have equity interests in.
Yes.
So a lot of that increase is going to come from the built to rent side of things. Some portion of that is our fund, assets under management as well. I have to clarify what it means for a fund to have assets under management.
Mm-hmm.
So,
Yes, please do.
but no, I mean for myself, I have
Oh,
to
yeah.
clarify what that means.
Okay.
Yeah, so
Yeah.
that maybe the numbers will change. But on the built to rent side of things, we currently own about 50 acres across 3 development sites. And it's land in Louisiana and Alabama that altogether we bought for $4 million, maybe $5 million.
Mm-hmm.
And when we talk about value add in the industry, most people will think about multifamily apartment buildings, existing inventory, basically renovations. But
Mm-hmm.
development is the truest form of value add. You have an asset that has very minimal value in it in raw land, right? It's like an empty canvas, kind of not worthless, but minimal worth, but high potential.
Yes.
And then you transform it into a masterpiece. And so for
Yeah.
us, that's built communities where, these 50 acres, we're building about 10 homes per acre, single family homes. And so even though the land is worth 5 million right now or so, getting it through entitlement, getting it through putting infrastructure on the ground, meaning utilities, roads, and curbs, and then building the homes on it, and then renting those homes out and establishing a revenue source, like establishing a new business basically where your service is providing rent and housing to people.
Mm-hmm.
That is really where I believe our portfolio, that $5 million of land is going to grow to 80, 50, 30, about $150 million in value, approximately, right? I'm not
Mm-hmm.
a broker or anything. I'm not making any projections or promises, but these are just projections.
Yes, right.
And that's the great thing, right? Our investors who invest into this opportunity, they get to see their investment transform from being worth $5 million to being worth all the way to $150 million. And the bank is obviously in there too, but for our investors, our passive investors, that's where we're creating value. Taking something that's raw land, blank canvas, and transforming it into a masterpiece of just beautiful, rows of homes that are being rented out to families.
I love the metaphor that you use, going from a blank canvas to a masterpiece.
Thanks.
That's wonderful because there's the value. The value isn't in the raw paint. That's a few dollars or whatever, but the value is in having the skill and the artistry to configure that paint in such a way that the paint becomes a masterpiece.
Exactly.
Yes, that's wonderful. I'm really looking forward to seeing how you play that out, and you have a 5-year plan for that. I'm really looking forward to watching you execute on that. And you said Louisiana
Yeah.
and Alabama are the primary states where you're doing this. How did you happen to choose Louisiana and Alabama?
That comes down to partnerships. So Andy, when he was putting the business together, networking around, one of his masterminds that he's a part of, he found our general contractor, general construction partners, Hammerhead Capital, and the folks, Derek and Chris, they're based out of Louisiana, born and brought
Mm-hmm.
up. Pretty sure they were born, but definitely brought up there.
Mm-hmm.
And so they have a boots on the ground knowledge that most people won't. We're investing in markets that your big firms out of New York, Chicago, LA might not have heard of. Everyone's heard of Atlanta, heard of Austin and Phoenix. Fewer people have heard of Lafayette, Louisiana, and have heard of Foley, Alabama. But
Mm-hmm.
that's the big thing when you, as whether you're a partner or a passive investor, when you're investing with someone, and investing with the right people, you get to rely on their track record and their experience to uncover some of these gems, like these hidden markets, these hidden opportunities that you would not otherwise have known about. Our limited partners, our passive investors, they can take advantage of the fact that we have local market knowledge that they don't have to have. They can depend on us to be the experts.
They're taking advantage of your specialized knowledge in
Exactly.
Lafayette, Louisiana, and Foley, Alabama. Yeah, and your knowledge of how to put those deals together. Yeah, that's wonderful. And they will
Yeah.
benefit greatly. I see that. My goodness, I could talk to you for a long time. There's a lot going on. And in the midst of all of this, you are a software engineer at Meta. Should I say Meta or
Yeah.
Facebook? Which should I
I'm
say?
either one. I don't know.
Yeah.
I flip flop between the two. I guess meta might be the more correct term.
Okay, that's fine.
Matter. Yeah.
I'll say Facebook because I don't like to be correct all the time. So there we go. There we go. As we wrap up, I could ask you so many more questions. I have more questions on my list here, but I could ask you so much more because this has been a very wonderful conversation. Grateful to you for that. What would you say right now, or what would you say that you're reading or listening to keep yourself sharp? Because clearly, from college graduation in 2019 to today, you've done a lot of self-education. What have you done? What tools have you done as you've gone along that path of self-education?
I think a lot of that has to do around business development and kind of self-improvement. When you're a W-2 employee, I think those things don't matter as much
Mm-hmm.
because the paycheck's coming in from somewhere. But when you're
Sure.
a business owner, no one is responsible for the paycheck but you. You have to go out there, you have to hunt so that you can eat. So a lot of the books that I've read on my bookcase over there, has been around building a business, whether it comes to sales, whether it comes to marketing. The most recent book I read is called Who, the A Method for Hiring, how to bring on the right people onto your team to help you scale. And there's self-improvement books in there too, like, Atomic Habits or,
Mm-hmm.
you know, the, let's see, Think and Grow Rich, The
Yes.
Charisma Myth. So it's just a lot of, I think that's the biggest thing about being definitely a business owner, but just someone who wants to grow in life, financially, personally. It's just you have to constantly be educating yourself and books, the internet, YouTube, but also surrounding yourself with the right people. And again, that's where your network, your mentors, your partners come into play.
Excellent. We'll make sure we include links to those books in the show notes. And yeah, everything you've said about mentorship, I believe is spot on. That's a way to accelerate our growth, mentorship and partnership, those two vehicles. Finally, how can people get in touch with you?
Yeah, so I would say my LinkedIn. If you don't have that, Ray, I can shoot it over to you. But my LinkedIn is one of the best ways to just connect with me on there. It's just
Mhm.
my name, Keshav Kolur. Luckily, the con of that, it's a difficult name to pronounce. The pro is that not as many people have that name.
Solid.
And the second is visiting our website, cap.com,
Hmm.
CLIE, as in vampire, cap.com/alternative dash assets. So we talk about, we've put together 3 lead magnets, my business partner and I, educational material. The first one is just a 2-pager, like a 5-minute, 10-minute read about why you should be investing outside the stock market, the tax benefits, what people who are worth north of $30 million are doing, and hint,
Hmm.
hint, they're mostly invested in real estate, not the stock market. What the tax benefits are, what the legal, environment looks like for that. If you really like reading and you want to learn more, then there's the ebook version. It's a 30-minute read, which just goes into more depth, more numbers, more graphs, more reasons behind investing outside the stock market. And then finally, as we've been talking about all episode, it's really about who. Who are you going to invest with? How do you know that they're the right person to invest with? Because that is the most important thing with investing. If I was going to tell you that, Warren Buffett was accepting new investors and he, was touting a 40% return, you wouldn't doubt, probably,
Hmm.
because he's a legendary investor, he's a public figure, he has to do business honestly. So, I mean, we might not be Warren Buffett's, but the same holds true for us. Our reputation matters, the way we conduct business matters. So the third educational, you know, material that we've included, and there's a due diligence checklist, 100 questions or so, questions that you should be asking people, regardless of what you're investing in. You should be asking them these questions, like,
Mm.
what did you do before investing? Why did you quit that? What are your goals with investing? Can you give me some references? Can you tell me about a time that an investment went bad and or went poorly, and how did you handle that? So just some of these questions that will minimize the risk of investing. There's always going to be some risk, but the more research and upfront due diligence we can do, the better we can protect ourselves and our hard-earned capital.
Excellent. Thank you for sharing with us info on how people can get in touch with you and also the info about the 3 lead magnets that are there. I'm sure people are going to want to drill down into those, and we will include those links in the show notes as well. Keshav, Kolur, it has been a pleasure speaking with you today on the ROI Clear podcast. We are grateful to you. Thanks for being here.
Thank you so much for taking the time, Ray, and thanks for those listening at home.
And thank you for engaging the ROI Clear podcast. At ROI Clear, we buy multifamily apartment properties, we improve them, and we give people a great place to live. At the same time, we give investors an opportunity to enjoy capital preservation, tax advantages, and a solid return on investment. If you'd like to know more, click the link to roiclear.com down below. We look forward to speaking with you.